And that's why the market roared higher today. And make no mistake, this move was all about remdesivir. I can say that with confidence because we're right in the middle of earnings season. And Wall Street hasn't exactly been thrilled with many of these reports. Let's go over some. When you look at the 5 big companies that reported last night and this morning, 4 of them were actually received poorly on an earnings basis. AMD, Starbucks, General Electric, and Boeing, although Boeing finished up nearly 6% for reasons other than earnings or demand. The lone winner was Alphabet on an earnings basis. As usual, all the macro data was terrible. I mean, you can't even look at these numbers because they seem so 1932-ish. And nothing new there. Fed did nothing of any significance. It was all Gilead. I know this because I interviewed the CEOs of Boeing, Starbucks, GE, and AMD this morning, and in each case, their weakness stemmed from the pandemic. Lisa Su, the brilliant CEO of AMD, put up a fantastic number, gave a solid forecast despite COVID-19. The fact that she even had a forecast was actually a big deal. However, she trimmed the low end of her sales guidance, COVID, of course, and the analysts pronounced it a slowdown. Some of them even whispered that AMD is beginning to cede its lead to processors to Intel. That's nonsense. AMD delivered an excellent quarter that was slowed by customers who were dealing with the deadly virus that shut down vast swaths of the global economy. It's a testament to the strength of AMD's end markets, laptops, data centers, gaming, that the numbers were so strong even in this tough environment. Give me a break. The truth is AMD ran up to the quarter. Now it's getting hit with all the predictable sell-offs like every time. I said, buy it. If we can get COVID under control sooner than expected, AMD's fourth quarter, gigantic. Then there's Starbucks, which got slammed in the beginning of the quarter because they have lots of exposure to China, then got slammed again at the end of the quarter when they have lots of exposure to here and the rest of the world, ultimately forcing them to close half their stores in America. Now, look, there's no way this could be anything but a horrible quarter. So it's a horrible quarter. But now China's reopened and Starbucks is putting up new stores with alacrity there. Another week, they'll start opening their shuttered stores here in America. Once that happens, I bet Starbucks returns to growth mode because people need their caffeine. They love that nitro. Stocks a buy. Next, I might as well lump Boeing and General Electric together because they're suffering from the same ailment. This pandemic has wrecked the aerospace industry, and the 737 MAX debacle sure didn't help. We have no idea when the FAA will let the MAX fly again. I know Southwest Air has said that they don't expect any good news on this front until the end of October. But the real problem is that nobody's flying right now. Demand! So the airlines are stretched thin, and lots of them are canceling their orders. Boeing and GE desperately need this virus to be contained. Remdesivir makes that a real possibility because it starts the process of removing the huge and justifiable fear factor. Why did Boeing manage to rally even if GE didn't go? I think it's because Boeing's new CEO, David Calhoun, came on Squawk on the Street this morning, made us feel like he's going to get a loan, meaning he can borrow money that will be backstopped by the Fed at probably a low rate, and not sell equity to the Treasury Department as some feared. It wouldn't surprise me if they augment that borrowing with a gigantic issuance of equity like Southwest Air did very successfully this morning. Hey, listen, if Boeing does a secondary here, buy. As for GE, I don't know what to say except that it's better to be lucky than good, and they're not lucky. Still, I believe in CEO Larry Culp. I believe in his ability to turn things around with this remdesivir data. I think GE, too, is a buy. How about Alphabet? It reported a good quarter. Saw its stock rally nearly 9%. Did that contribute to the rally? Well, wait a second. Ruth Porat, Alphabet's fabulous CFO, mentioned that there might be some green shoots in advertising when all that was really visible before this was a burned-down lawn. But then she spent the rest of the conference poo-pooing her own optimism. The real reason Alphabet roared well, the word they used was efficient. The word I use is profligacy, as in the end of an era of profligacy and the beginning of an era of aggressive profitability. When Alphabet is one of these periodic cycles where it's trying to make as much money as possible, like it did coming out of the Great Recession, you got to own this stock. This one took me by surprise. I gotten used to blown quarters, not blowouts. Losing streak, over. But you can't really extrapolate from Alphabet to anybody else. Today was all about this drug.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.